And we are live. I'm gonna just check my sound is actually working. And we are live. Sweet. Thank you so much, Eric DeB, for jumping on a live podcast with me. I'm so excited to talk to you today because you are a day trader. And for those that don't know what day trading is, it's a little bit different than Forex. It could be, but what Eric actually does is more involved in stocks. And this is a just boring passive income, or it might not be, who knows? Eric's gonna kind of go into detail what it is he does and talk a little bit more about what he does in general. So Eric, take it away.
Absolutely. So ultimately it's interesting. I was a branch manager, I don't know, 10 years ago for Chase Bank. In order to be a branch manager, you have to get your Series 6, 63 life and health. And so I took it a step further, got my 7, so I can trade funds and so on and so forth. So that kind of got me interested. My dad was an investment banker growing up, so I've always been introduced to the financial industry and financial literacy. So that's kind of where it started as a kid. So initially, my passion and my goal when I was in high school, if you ask my son, he'll tell you, what did your dad want to do when he grew up? And it was a stock trader. I wanted to be on Wall Street. I wanted to work for a big hedge firm, and I wanted to be that guy. So but once I learned the hours and the commitment and everything that goes with it, hence I took a different route. But the nice thing about today's technology is, with the internet and fast speeds, so on and so forth, is you literally have it on the fingertips. So I'll give you a quick example. This is what I carry with me at all times. This is my cell phone. These are all the stocks that I'm in and out at on a daily basis. And so I use personally my platform I use is TradeStation. So I've used it for the past 3 years and had nothing but success. So I average about $2.95 a trade. I trade anywhere from
for what is I have no idea. This is more for my own benefit, to be honest. But what is like 294 is what you said?
Sure, 295. Yeah. So like each time you trade and you place a trade, both on the buy and the sell side, you pay $2.95 a transaction fee. So that's how TradeStation makes their money. So a lot of platforms, there's like Robinhood, there's some other ones that are free. But again, you get what you pay for. So I like my platforms that comes with a ton of options that help me trade. It's more of an advanced platform, but I trade anywhere from 20 to 50 times a day.
Wow. And is that just automation? How does that look like? It seems like that would take up a lot of your time. So is that really passive, or what do you feel like?
Yeah, absolutely. So, there's two different variations. There's, day trading and there's swing trading, and then there's buy and hold. So my strategy, has been basically day trading. So I'm in and out. I have a list of stocks, and I trade a little bit differently than most. Most would say, get up early, look at, trends, look at companies, do your research. Right. I've never done that, and I've made a ton of money doing it. So mine's a little unorthodox, but the way I trade is I trade by analytics, and I trade by patterns. So I set what's called Bollinger Bands, which is basically like patterns that if you just say this is your screen, they go across all the way and they show the median. So it's not the high, but it's not the low, and I trade in between all day long. So I'm just following the patterns. And the other thing is I usually have about anywhere from 10 to 15 stocks that I know inside and out from just trading the same stocks the last 15 years. So I know the threshold of the highs and the lows per year. So they tend to follow patterns over the course of 12 months. And so I follow those patterns and I trade in between those patterns. So I get in, I'm not greedy on the high side and I'm not greedy on the low side. So as long as you can get in and out, I can trade the same stock maybe 15, 20 times a day and make a smaller profit throughout the day.
And with your profits, if you're trading 5, 6, 7 times a day and you're paying these transaction fees of $2.95, $3, how does that kind of calculate into your profits? Or, is that such a low number where your margins are so much greater than what you're actually paying in fees that it just is a wash?
Yeah, and I think it's kind of, if you ever someone look at my Facebook or just anything else, I have a theory that I've always lived by. It's kind of go big or go home. So I trade, again, unorthodox. I trade a lot differently. So I don't go in. Well, let's just use the analogy of someone that's just starting, right? You may say, let's say I have $1,000 to trade with, right? And you're going to pay that $2.95 every time. And actually, that's because I trade by volume. That's mine's $2.95. Most people's can be $5 or $6 a trade. So if you're in and out, it's going to cost you $10. So if I'm trading 10, I'm buying 10 stock or 50, something of that nature, your margins are very slim. So in reality, you're hurting yourself because you need it to go up a substantial amount to make that margin, right? So I go in and I place anywhere from 7,500 shares to 10,000 shares to up to 25,000 shares, depending on the price point. My sweet point is anywhere from $1 to $20. I stay within that margin. So I'm not trading Google. I'm not trading Tesla, even though you can make a killing on those, but you can also lose a killing. So for instance, if it swings $100 up and down within a day, you buy 1,000 shares, that's a lot of money. But at the end of the day, if you catch it on the end and it goes down for a couple of weeks, you need your money, you're SOL. So, I just stay away from that. And the other thing, a rule of thumb that I tell people is only play with what you can lose. Similar to Vegas, right? So in Vegas, I used to remember, I'd bring X amount of dollars, I'd put X amount in my pocket. What I make goes in my left pocket, I go home with, and I play it until my right pocket's done. When it's done, I walk away. Day trading is similar because you can really get caught up in that. I'm a competitive person. I'm type A by nature. So I hate losing money. I hate losing in life. I hate losing in sports. I hate losing in business.
I feel you.
So you can get in that mode where you're like, I just want to win, but you have to take a deep breath and take a step back, and you can't get emotional. Similar to like when I buy real estate, it's a transaction, and I know perhaps it's different variation from women and men. Women tend to have an emotional attachment to a piece of property.
Right.
I go in and I just say, how much money can I make on this property? You know what I mean? And I'm going to buy the ugliest home in the nicest neighborhood. And that's it, very cut and dry. So in stocks, they're no different. So I buy the stock. I usually, and the other thing is a lot of traders will start trading at like 6:30 in the morning, Pacific Standard Time. I'm in Arizona because it's 9:30 when it opens in New York.
Yeah.
And they're going to start with the bell and they're going to trade, right when the bell opens. I tend to sit back. I wait 2 hours and I start waiting for those trends to already start taking place according to my analytics. So once the margins start going and I see the Bollinger Bands, I'm already predicting where it's going to go, and I'm finding those gaps, and I'm in and out of those gaps. So I'm playing, and the other thing is like these big companies, they have bots, right? So they're trading 100,000, 200,000, a million shares in, out, in, out. So you'll see it if you're watching the margins just like this constantly. So the difference is you want to be in between that bounce. So it's just, it takes time, but it's definitely a great revenue stream. I do it for fun. I don't do it for a living, but some would consider at the end of the year I can make a living off it. I mean, I do, but it's more of a side hustle. It's kind of a 6-figure side hustle.
No, and I've seen some of your numbers, and they're just outstanding. I think you did 20,000 the other day, which was quite amazing to just to see some of these numbers that you can make, and not even doing it through Forex. All these people think you need to do, Bitcoin or Forex or just trading, but you can actually just trade stocks like you do, Eric, and make a killing. And I think that a lot of people think that you can't make money in just traditional stocks when you definitely can. So I know that you do a lot of day trading. You say, do you have some buy and hold where you kind of keep for dividends, or do you just strictly just play the day trading game?
Yeah, I just play the day trading game. I mean, there's patterns and there's different variations. So like I said, I used to hold my licenses. And so I used to help people for a living inside the bank, but I also used to help friends and family outside of the bank. And the biggest thing is you want asset allocation, right? So it's no different from your stocks. So if I'm day trading, I also wanted different variations to play within that day trading strategy. So I am going to have some buy and hold. I am going to have some swing trades where, if I feel comfortable, I'll give you an example, RYI, this ticker symbol HB, oil and gas industry. So it varies on the high end, $16 for the year, low end $3. And I kind of know the time of year when it's in each one. So for instance, if I put in 10,000 shares and I'm buying it at $3, I can sit on it for up to a year, knowing that at some point in this year, it's going to be to $15 because the last 10 years have proven that it's going to go there at some point. And then that's the other thing is where you can't be negligent, meaning like I can't look at my numbers. I can't not look at information. So for instance, JCP, it's a brick and mortar business. Nordstrom, same thing. Sears, same thing. So if I haven't been looking at the news for the last 12 months, these numbers, it's like falling on a knife. It's just constantly going down, down, down. So the other alternative to that is there's a lot of day traders out there. I'm learning to play that game as I go, but a lot of day traders out there actually short the market more than they go long. And what that means is they're banking on a company actually losing profit as opposed to gaining profit, because in day trading, 7 out of 10 trades, it's easier to make money as it's going down because it goes down faster than it goes up.
Right.
And it takes longer longevity for it to go up than it does go down. So, numbers and time will tell you that's a lot easier to make money shorting the market than it is going long.
That is amazing. I think it's funny. I was in high school years and years ago, and I think this was during 2007, 8, 9, when the stock market crashed and the housing market crashed. And I remember, actually it was college. I can't even think straight, but I remember my my Spanish teacher was like, yes, like I'm shorting the market. I'm making so much money, because he knew that, he didn't know, but he saw the trends just like you do. And it was dropping so rapidly. He was making so much money. And I think the next year he was like, God, he left from teaching, because he realized that there was so much more money to be made in having money make money for you instead of exchanging time for money. So like, obviously your dad, you talked about it earlier. How do you find time to work on your business or day trade? I mean, that does take some kind of time consuming. Is there any like kind of life hacks you can give people, or do you just like lock them in a pin and be on your way, or how does that work?
No, absolutely. And it's funny because we talked briefly, and it's interesting that I'll just say that we met in the mastermind group, and so it's interesting. If you want to learn from people, first and foremost, join the groups of where you want to go. So, and I'm teaching my son that right now. So my son is very educated, straight A student since kindergarten. I'll tell you a quick example. I did a post the other day, and this is learned by watching, meaning like he's watching. Our kids are always watching what we're doing at all times, and it's soft spoken, meaning I don't have to say or do anything, but he's watching my actions. So he's picking up the financial literacy without me even saying anything. He's just watching what I'm doing. So, give me an example. My son's 14 years old. This was 13. So he wanted to buy a that's about $3,800 mountain bike as a 13-year-old. So could I write him a check? Could I? Yeah. But at the end of the day, what is that teaching them, right? I mean, it's interesting. I always find like, you go to some of the upper scale high schools per se, and mine when I grew up in Southern California, and some of these kids are driving BMWs, Lexus, and they're brand new, And so to me, even if I had the money, I'm not going to give it to them, because that's not a lesson. It's almost like Warren Buffett. It's not the lesson I want to teach him. It's one of those, like, you can take someone fishing and give him some fish, or you can show him how to fish and he can have dinner for a lifetime, and it's no different. So back to my son's analogies, I just said, look, you want that bike, I'll pay $500 towards your bike, but you're going to get a job. So in the state of Arizona, you can get a job at 14 with parental consent. So he said, okay. So he literally mapped out how many hours per wage, how many hours it will take to get his bike. And he had it all calculated and everything else. And so then he said, in addition, I'm going to side hustle. I'm going to tutor and I'm going to do some other things to speed up that process. And sure enough, he had his bike in 3.5 months as a 14-year-old. So it's not just an adult thing. It's not just a parental thing where it's like, education starts when they're little. My dad taught me about money when I was probably 3, 4, 5 years old, and how money works, and the compound interest, the rule of 72. And, and so I literally, Aiden's college fund has been paid for in full, and I'm 44, has been paid for over 5 to 6 years, because I started paying for Aiden's college fund before I even had Aiden, knowing that I was going to have a son or daughter that's going to go to college someday, and compound interest is going to. So I invested in that fund for 15 years, and now it's making money every year. So those are the little things that I'm teaching. So in regards to your question, as far as time, again, like the same thing is stocks are going up and down rapidly. They're just bouncing. So, use your phone today. Your phones it's a computer in your hand. So, you can run multiple businesses on your phone, and you can leverage and automate your businesses literally on your phone. And so, and we had a brief conversation about multiple streams of income, and that's just one of my revenues. And I know we both share a passion for real estate and buying and holding and obviously investment properties, commercial properties, so on and so forth. And so that's another revenue stream. I also own a production company. So, it's just things that, you do to manage your time and to manage your money. And the biggest thing is, Robert Kiyosaki talks to everybody about the four quadrants, right? It's in my early 20s, I was in quadrant 1. Then I learned about quadrant 2 as a real estate agent. Then I learned about hiring agents in quadrant 3. And then eventually I bought and hold real estate and I'm paying it off. And that's quadrant 4. So eventually everybody's goal should be to be in quadrant 4 when you're in your, if you can do it in your 30s and 40s, great. But most people 50s, early 60s, where you're having retirement, but you don't want to just retire on just one nest egg, i.e. your Social Security or a lump sum investment from your work or a 401k, because that eventually with inflation and just cost of living and, it'll run out. So you need other revenue streams to secure yourself.
And that's why they say cash flow is king, because you can rely on that cash flow to come each month, kind of like a Social Security, because I believe it doesn't run out. I don't know. I've never had Social Security, but that's why I always talk about people with the 401ks is if you look at one, it's a kind of a guessing game, because obviously the market's cyclical, so it goes up and down. And if you retire when the market's down, you're going to have a much smaller nest egg to retire on. And like you said, once that income is gone, and you can no longer recover it. So that's why, like me and you, we invest in real estate, because our tenants are, one, paying it down. We're getting tax benefits. The way that passive income is taxed different than active income. So you get all sorts of tax benefits. You get appreciation, you get cash flow or debt pay down, all these benefits from real estate, which I think is amazing. Obviously, my wife does her 401k because she has her matching contributions from just her employer, unlike us, where we really don't get that benefit. But like something where you can use a self-directed IRA, where you can use then to buy for real estate, and then obviously pay yourself back through real estate is another way to leverage a IRA. So there's all sorts of ways and tricks you can use to make more money just by one stream of income. But I find it really important to work on one income stream at a time. I'm sure when you were building your portfolio, you weren't spreading yourself thin. You were kind of going one thing at a time. Or how do you actually grow your, did you take one income stream at a time, or did you kind of, and then make it passive, or did you just kind of do it all at the same time and just hope that you had a lot of money and it all worked out?
It's interesting. They always say there's so many ways you can slice a cat, right? Or slice whatever you call it. But so my strategy in my early 20s was, I always made really good money, considerably to my age group. So when I got a job, I used to work for Enterprise Rent-A-Car. That was my first job out of college, but I had already interned 3 years prior to that. So I was an assistant manager within like 3 months. I was a manager within a year and a half, area manager within 3 years. So, but I was always taught that, you save immediately. The biggest rule of thumb that I could tell anybody, no matter what it is pay yourself first.
Mm-hmm.
Before you pay your bills, before you pay anything, you pay yourself first. So you put money aside. Usually I would recommend 15%, stretch it if you can. But at the end of the day, make sure that money comes off the top. So if you're in a corporation, money off the top would be your 401k. It's all pre-tax dollars. Max it out. So especially if, like you said, your wife, if you have a matching contribution, most companies are 5 to 10% if they're really nice, up to some I've seen like Boeing, some of the other ones are 15%. Wow. Then match whatever percentage they're giving you, because that's free money.
Right.
So you silly not to. And then what you want to do is you budget around that number. So if you have to, especially if you're in your early 20s, late 20s, early 30s, starting a family, I know it can be hard, but trust me, when you're in your 40s, when other people aren't, you're going to be sitting back saying, I'm glad I did it. So, you know what I mean? Always pay yourself first. And then my other strategy was just to put money away. And so interestingly enough, I bought my first house when I was 22, bought my second when I was 24, bought my third when I was 26, and I had a portfolio of 47 by the time I was 30. So, and how I did that was just kind of, you talked about, I leveraged one house. And this is, mind you, I started in Southern California, so it was a lot easier than most of the other country. But, appreciation was going up. At one point in 2003 to 2005, it was going up almost $30,000 a month on each house. So it was a lot easier to do it than, say, if you're in the Midwest or some of the other places. But, I'd buy one, I'd sit on it for 6 to 8 months. I would take a home equity line of credit. I would take that money out. I'd buy property 2. I'd sit on property 2 for 2 years. I would take money out of property 2 to buy property 3. Now I have 3 earned assets. And meanwhile, property 1, property 2, it's now been 4 or 5 years, have also gone up even more. So I can increase my line of credit on those houses as well. So there's a saying, OPM, which is other people's money. So if you can truly understand that and leverage that money, you can buy, nowhere else in the other asset can you take $5,000, $8,000, $10,000 and turn it into a $300,000 asset, a $500,000 asset, i.e. a house. So, some people, it's a mindset as well. Some people will look at it as a liability. I put the house on the asset side. So, just look at it.
I totally agree with you. Like a lot of people call it the BRRRR method, where you buy, repair, refinance, rent, refinance, and then repeat. Similar thing where you're using your. So for me, I actually refinance my properties. I'm gonna start. They're a little bit smaller in I guess appreciation or value. They're not in Southern California. I used to live in Irvine, so buying in Irvine was impossible to have a return, just because the rate of return was just horrible. I would be negative cash flow every single month if I ever invested. I think we were, just to give you guys an example, when we moved last year, we were looking at I think it was a 1.2 square foot like condo or maybe townhouse. It was really, really small. There was HOAs. We were in Irvine, so there was like 3 HOAs just associated with that community. And I started investing in Las Vegas. And when I bought my first rental property, it was like 118, and then now it's worth like I think 220. And what I did was I bought it, like you said, the first year. I had to put 20% down. I didn't do any kind of like house hacking where you get in at 3.5 or do an FHA. Never done any of that. So we bought our first one, and then our second one, I did the same thing. I put down 20%, and then that's when I had enough equity in the first one where I could use that, pull out the equity to put down half of the down payment, and then I had to use my own money for the rest of it. And then as the other properties appreciated, again, I pulled out all the equity, refinanced them, and paid down, bought my second floor unit, which allowed us to have 10 units. And then this year, we actually are refinancing all of our rentals because they've appreciated so well. Plus, the interest rates were so high when we were buying them that now it's just a no-brainer not to refinance. Obviously, there's all sorts of tactics, like you said, where you can use an equity line of credit when you have enough appreciation in your house, or enough equity in your house, I mean, and you're able to actually pull out money much cheaper because you're not having all these fees, you're not having all these points added to a refinance. It just really depends on what your numbers are. You got to know your numbers, obviously, with anything. So that's super important. If you want to understand how to leverage money and use other people's money, just learn about money. Money is a great tool to do a lot of things and do a lot of things fast. That's how you were able to get up to 47 properties really quickly, and that's how you kind of play the game with your day trading, is because you're trading at such a high volume. There is a great chance of making a lot of money, but you could also lose your shit if you don't know your numbers, or you don't understand patterns, or you don't understand all these different things. So that's why it is important to understand how money works, understanding patterns, understanding leverage, and just learn about money. I think that a lot of people just don't understand how money works, and when they hear that I have $1 million in debt, they're like, "Oh my God, that is so horrible." And I'm just like, no, that I would actually be worse off if I didn't have that debt, because one, I can write off all that interest every year, so that's a benefit. I'm making money in cash flow. I get paychecks every. I just got one. The 8th. My property manager, he just sends me checks every month. I don't have to do anything, so it's completely passive for me. So I love real estate. I love investing, but I also understand leverage, and I understand risk and my risk tolerance, and understand that I need to have enough income to support in case the worst thing happened, like all of our tenants can't pay. And so you have to have, like for me, I have to hold a great amount of reserves to protect my assets too. So I think it's super important to start investing early. Like when you were saying that you were investing in your son's college fund way before he was born, I kind of have a similar strategy, but Brendan Turner, actually from Bigger Pockets, talked about how he bought his daughter a 4-unit before she was born. And I think he put it on a 15-year mortgage, so he had a lower interest rate. And by the time she was ready to go to college, he was like, okay, here's this paid off property. You can either live in it and rent out the other units, or you can sell it and go to college and pay for your tuition or whatever that might look like. You can live in one and then obviously rent out the others, or rent them all out and then have that pay for your college. The option is yours. So if you know kind of the different exit strategies and how to get into property. The world is your oyster because real estate offers so many different ways to get in and so many exit strategies to get out in case you lose your shit. And I think a lot of people think that just because you put down, like, say 20% down and you refinance and you pull equity out and you keep rolling over your equity into other properties, you're gonna, like, at some point lose something. But unfortunately, or not unfortunately, fortunately, you're able to sell the property and still pull equity out or pull your money out because there is exit strategies. You're not over leveraging. They're not allowing you to do 110% of the loan anymore. So all these different things kind of protect you when you do invest in real estate. I know we kind of went off on a tangent on real estate, but I definitely want to learn more about day trading and kind of what stocks do you look at? What makes a good stock or what makes a bad stock? Is dividends matter to you even though you're day trading? How does that work?
Yeah, sure. So, Warren Buffett, if you listen to him, he's going to tell you only buy stocks with the dividends. But to me, that's more of a buy and hold strategy. If you're going to buy a stock for 6 months, not even 6 months, if you're going to buy it for years, meaning like if I invested in Amazon, Apple, any big retailer, and I'm sitting on it for, if my long term is 5 years, 10 years, whatever it is, and every month I'm allocating money that keep going in to, it's because that's called dollar cost averaging, right? So as a stock goes up and goes down, I'm writing it and you have a median all the way across. So sometimes you're going to buy at the high end, sometimes you're going to buy at the low end. So if that's your strategy and it's long term, which is kind of, to me, it's archaic and that's a little old. But those are the people back in the day that had the same job for 35 years. Right. You dollar cost average your stocks, you're buying the same one, you're holding it for the next 35 years. And you start with maybe $5,000, and by the time you retire, you have a 1.5 million, 2 million, whatever it is. So my rule of thumb is you can have that a lot quicker by day trading. Like you said, though, you need an exit strategy in everything you do, whether it's real estate, whether it's stocks. Never play with more than you can lose, and don't gamble with money you don't have.
Right.
So, with mine, same thing with your assets. So say if you have, the best thing I always tell people for long term is mutual funds, right? Because a mutual fund is comprised of individual stocks all the way across. You have some blue chip, S&P 500. Small cap, large cap, mid cap. So, that's a strategy in itself. Whereas mine, I want a stock that's between $1 and $20. That's my range, right? Yep. I want to buy as many of that shares of that stock in that day as possible. So if I have a stock saying sitting at, I'll give you an example. So the one that you had earlier was a stock just the other day, and I've traded it for the last 5 years. It's called WLL. It's in the oil industry. So I rode that stock both in my son's college account, and I also wrote it in my 401k, and I wrote it in my IRA, and I wrote it in my regular portfolio. And bought it at $8 a share, rode it all the way to $58 a share 2 years ago when oil was at the peak, and then turned around and sold it. Then turned around and shorted it on the way down. So that stock just started trading I bought it 7,500 shares, and I posted it actually on my Facebook stories, and 7,500 shares at 96 cents a share. So, but I know that stock, again, I've been trading it for 5 years. So I know at some time that stock is probably going to go up to 10, 20, 15 bucks, depending on oil, unless oil doesn't tank. So that individual stock was going through bankruptcy. So kind of a risk, because there's always a risk to everything. And so it was, okay, are they going to come out of bankruptcy or are they going to not? So I've traded the stock long enough to know they're coming out. They have a strong portfolio. So I bought 7,500 shares knowing I'm kind of taking a risk. Sat on it for 48 hours, and then a friend called me, I think it was last Thursday or Friday, and said, hey, have you checked out WLL? I said, no, because I'm thinking in my mind, I'm holding this for 3 to 4 months, minimum, if not maybe even a year. And he says it's trading right now at $23. So it went from 96 cents, it came out of bankruptcy, and went to $23 a share. So, do the math, $7,500 a share, 96 cents to $23 a share, I made a ton of money. So I wrote it for one more day. It went up another $2 and I sold. So, and now the smarter ones would have shorted it because it went from 23, now it's at 20. So I feel it's going to go back down quite a bit more. But, that's, again, there's some risk involved in everything, but you have to be willing to risk, but you want smart risk. You want an educated gamble, an educated risk. So that's where your homework comes in, by researching or just by watching patterns of stocks. So I always look, anytime I do a stock before I even get in, number one, does it trade a lot? Does it have high volume? So that means other people believe in the stock. And then 2, how big is the flexibility between? Like, what's the difference between the low during the day and the high during the day? Do I have at least, a 30-cent, 50-cent gap? And that's usually what I play within. So I know it's going to fluctuate that much. So when I buy my shares, I can sit on it for a couple hours. And you talked about money or time management. So I'll buy it. I put usually, I don't know, right when the bell opens, 15 to 25 trades right off the get-go. And then I'll just leave them on my phone. I let them sit for a while, and then I get notifications as soon as the stock goes through. So then I stop what I'm doing. I bring out my phone or I bring out my laptop or wherever I'm at, and then I will actively trade that stock for the next 5 minutes. So I'll buy in, I'll wait till it goes up, wait till it goes down. Usually I'll do like a 10-cent, 15-cent gap, and then I'm out. And then I'll just rinse and repeat all day long.
Wow. So how much time do you think you put into in a day, say, like just starting out and then now, how much time do you think you have to put into day trading?
Well, I'll say, as you start out and you have less available funds to risk, you want to spend more time, right? So the other thing is I'll play with stocks like I gave the example earlier, RYI or WLL. Like if I put money in 7,500 shares, I can sit on that for 6 months and it's not going to hurt my bank account. I'm not living off that money. I don't need that money, but I know in the back of my head that money is going to make me money. It might not be tomorrow or the next day, but it might be in 6 months. People starting out don't have that opportunity, right? So you have to kind of go in with a little more research and you have to make money immediately, So the other option is, you spread yourself, you allocate accordingly. So don't just jump in. If you're going to day trade, you can't do 1, 2, 3 stocks, because what if all 3 go belly up?
Right.
So you want to do 15, 20, right? Some are going to, and then short and long. You want to do both. So you want to do it to the point where you're allocating your risk and you're minimizing it. So if I have 5 stocks that I lose money on, the other 15 are going to go up. So at the end of the day, I'm making money. So you have to kind of play around with that as well and just find your sweet spot.
So, what is your exit strategy with day trading? Because do you just roll your profits into the next day in a sense, or do you take some out and then reinvest it and put it into your long-term funds? Do you just put it into real estate? How does that look?
Yeah, absolutely. So I have different buckets. I have a real estate bucket. I have, like I said, my kids' college fund, which now I'm not allocating money in towards, but so I'll put it to other stuff. So right now, my 2 major buckets are real estate. I'm refinancing right now and putting them all on 10-year fixes. And then I'm going to take a percentage of my income and a percentage of my capital gains, and I'm going to pay down my real estate as fast as possible. So my goal is to have everything paid off by 50, 55 at the latest. And that's my retirement. It's my built-in retirement.
Yep.
So not only do I have X amount of $1 million in appreciation of the actual asset itself, but I also have rents and rent increases of 3 to 5% a year that I can live off. So it's beating inflation.
Right.
So in regards to stocks, no, I've never, well, strike that. The house I'm living in now, I bought that off 6 months of trading. So, and it was originally going to be a flip. And so I need the flip money and I need the down deposit. So that was made off of 6 months of trading. So I saved that money. That was a direct purchase. That was something I put money towards. And so I took that money out. But I've been trading for about 4 years, 5 years. And that's the only time I've ever taken money out. So normally I roll in the income back in and I trade more. So I'll give you an example like the WLL. I used to trade 1,000 shares at a time, right? Because that's what I could afford.
Right.
It was 2,500. Now I'm up to 7,500, and that's one stock. So say 8 months, a year from now, I'm probably gonna be trading 10,000 shares of that same stock at a time. So it just gives you more leverage and more opportunity to make more money.
And what I love about what you said kind of a few minutes ago is don't lose any money you can't afford to, or don't invest any money you can't afford to lose. And I think that what you do is obviously you spread your risk too. And I think a lot of people don't spread their risk as much as they should. And a lot of people just don't have exit strategies and ways to recover their money, or they just invest invest their money and gamble it, like you said. So I think that the best people understand risk management, understand the value of time and money, and see patterns, understand the game, and live it every single day. You can't just study theory and never actually go into it. You have to go into learn. I mean, when I first got into real estate, I'll tell you this funny story. I'll tell you 2 funny stories actually. Our first rental property, we went in, we're so excited. We got our first rental. We just closed on it, and someone wanted to rent it out like that weekend. And I was like, yes, this is so cool, amazing. And so we went out, had dinner, celebrated. We had a tenant paying us. That was double our mortgage, and we were just like, sweet, we're gonna be rich. And so we went out to dinner, and by that time it was pretty late, and we weren't gonna drive back from Vegas to California because I was just, I think it was at like 11 o'clock at night, and to get home at like 3 o'clock in the morning would have been miserable. So we're like, okay, we'll just stay at State Line and we'll just call it a night. So I get a call, and this lady, she says, hey, Brennan, unfortunately, like there's nothing I can do, but my mom is really ill and I have to drive to California. Is there any way we can just tear up this lease and, just shake hands and be on our way? And I was like, yeah, it's fine. Let's do it. So we met up, and she gave back the keys. We exchanged the lease agreements, tore them up, put void, all that fun stuff. And I just had a bad feeling. I was just like, you know what? And this isn't like anything that they teach in a real estate course or anything like that. This is just intuition or whatever. But I was just like, man, something feels wrong about this. So I called the locksmith that same night for an emergency locksmith, and I had him change all the locks. And the next morning, we grab the keys, we go check out the locks, and the locks don't work, or one of the locks don't work, the front door. And I'm like, man, didn't you guys like change the locks? And I called the guy, and he's like, yeah, we changed them, we tested them. And so I put the key in there, it wasn't going in. And I look inside, and there's a broken off key inside where the lady tried to come back, open up the door, and live in it because she knew we were going back to California. She was going to squat in our apartment. And they don't teach that. They don't, it's just intuition. So luckily we got saved, but we actually had a property manager who turned over that unit, not a property manager, a handyman who turned over that unit, our second unit, and was now working on our fourplex. And so he was like, hey, Brandon, we need $5,000 to turn over this first unit to get it started. I was like, that's fine. That's pretty normal. To just very cosmetic. It wasn't like anything huge. So we invested, gave him $5,000, and he was taking a little bit longer. And he said, hey, Brandon, I need another $5,000 to turn over the second unit and hire some help so we can get these done quicker. And he bounced and took my $10,000. And they don't teach you anything in a real estate book on what you do after that. So I just called the cops, and I said, hey, this guy stole this money. He was a handyman, blah, blah, blah. And I guess lo and behold, I guess he wasn't working without a business license. He ended up going to jail, and he had to pay restitutions to me. And I got my money, part of it back. But, you have to be in the game, and you have to, I mean, I'm sure you've had some failures and lost some stuff. And we'll go over that in a second. But you have to learn from those failures and be okay with it. That's why it's, like you said in the very, very beginning, is you can't be emotional about business. You have to understand the risk. You have to understand what you're getting into. And if you can't, like you said in the very beginning, is invest anything you can't afford to lose. And so I knew that if I gave him $10,000, I could potentially lose it. And I did. I did lose it. But I did get my money back, or some of it, with time. But it is part of the game, and you just have to understand those risks. And so I'm guessing you've had some losses too. Let's share some of those, Eric.
Yeah, absolutely. Well, two actually. I took a beating, which again I talked earlier, and it's interesting because I think you learn lessons through failures, right? I mean,
oh yeah, definitely. You're learning opportunities.
So I think when I had at the peak, it was. I still remember vividly, June of 2006, right when the market started. That was the first month of the market starting to go down and correct. And I had 10, I was doing fix and flips, which now I laugh and I say fix and flops, because I had 10 homes that were on the market at the same time. So the first home I sold, I made like $155,000. The second home I made $90,000. And then 3 through 10, I was losing my butt. And so every penny that I made on the first and the second house, and then some, was going to recover. And I was losing $8,500 a month. And so a lot of times investors at that point were just literally sending the keys back to the banks and walking away.
Right.
And, you know, I'm a man of faith, and my father knew what I was doing at the time. And he said, hey, you know, you're got bigger than your britches, you know, your mind, your appetite's bigger than your stomach, you know, as he says. And he just said, it's a lesson you're going to learn, but you are not walking away from those properties. You're going to hold them until you don't have a penny left. And that, you know, I respect my father, and he's a good businessman. And, you know, he's like, you got yourself in it, and you get yourself out and you do it the right way. So, I mean, I couldn't even tell you how much money I lost, almost probably $500,000, to be honest, in the course of probably 24 months. Luckily, fortunate enough, I found a hedge fund in New York City that bought at least 24 of those houses in a portfolio. So I didn't have to short sell them. I just basically sold, got out. They wanted a cash flow strategy, so I already had tenants in them. So it worked out for them. So I was fortunate where I was released of that obligation, but still held the other ones that I was losing my butt on. So, you know, I was fortunate enough where I short sold a lot of them. I didn't have to foreclose on any of them. And I still have 8 homes today. So, and those are the ones I put down quite a bit more money from the very beginning. But, you know, the lesson learned in that was, you know, don't get in over your head. Don't, you know, I got greedy, I got rich. My investment strategy was, hey, I'm going to retire at 35. You know, without many homes, had it appreciated just 2 more years, I would have been done. But, you know, that's hindsight, right? Hindsight's 20/20. And so I didn't have an investment strategy, or an exit strategy rather. And the other thing about that is the hard lesson learned is money in real estate. And I'll tell everybody this from just learning it. The money is made on the front end, not the back end. The sweeter the deal, the sweeter the juice. So, you know, that was a hard lesson to learn, you know, and the realtors was at that time in our market, similar to Phoenix market now, where literally homes are just boom, boom, boom. They're selling, rent values are going up. And so I just tell people, be careful, you know, be careful with your strategy. And because it's not always going to be like that. There's always going to be a market correction. There's a top ceiling to everything. So that was that. Second option was in the financial and the mutual fund world, or the stock market world. I bought a ton of shares from JCP. And I'm like, oh, this brick and mortar, it's been around forever, which it has. It's got a steady track record. I bought it, I think, at $6 a share. And then I dollar cost averaged it all the way down to my dollar cost average right now is like $1.04. Well, I mean, I think it's trading right now at 17 cents to 30 cents, sometimes 50 cents. And so literally at this point, I'm holding 35,000 shares, and I'm either gonna make a lot of money or I'm going broke on it. But the life lesson of that is, you know, I did not put a stop hold on it, you know, and a stop limit. And so I was like, it can't go down that more. It can't go down that more. Well, guess what? It did. It went down like $1.50 overnight. Next night it went down another $2. And so by that time, you've already lost so much money. So I dollar cost averaged it down, which some people will say that's dumb too. You're falling on a knife. But, you know, it's one of those things, risk reward, you know? So at this point, it's like, again, I'm playing with money that I'm willing to lose, not money that I'm off of, if that makes sense. So,
no, definitely.
You know, but the lesson learned is I was in the production industry, and I was on a show. So 4 days, you're working 15 hours a day. And, you know, I was like, I'll just see how it goes when I get down. Well, by that time, it already went down $3.50 to $4 in that 4 days. So I could have put a stop limit on. I didn't. I gambled and I lost. And I lost big. So moral of the story is, you know, do your due diligence and never be too proud to lose money. You have to be willing to take the risk to lose money. So, like for day trading, you know, if I'm buying 7,500 shares here and 5,000 shares here and 3,000 shares here, I'm going to lose money every day. So you can't go in thinking I'm always going to make money. I think that's the biggest misnomer from people, is they always think they're just going to make money, and it's easy, you know, and for some it is, but even if you talk to the top gurus, they still lose money too. Just over the cost or the time difference, they're making money over the long run. So if you take your, you know, I have some days now where it's like I might lose a couple thousand, and that's, you know, some people will be like, oh my gosh, I can't lose a couple thousand. But in the course of 30 days, I'm making money because I have 31 days in the month, or 30 days in a month, which is, you know, take off your weekends for trading. And, you know, I have plenty of time to make that money back, but you have to do it smartly. So you can't go in trying to be so aggressive saying, hey, I'm going to win my money back on that stock. You leave that stock alone, refresh your brain, and go after the stocks that you are winning on.
That's amazing. I love that you did lose your shit, and that's fine. You're okay with that. It was a learning opportunity, and you took that learning opportunity, and you're going to grow from it. My sister-in-law actually worked for JCPenney's as an upper, and she talked about how they were going to pull out all this money to buy a house when we were in California. And I think this was last year, maybe 2 years ago, when they did drop a lot of in price for JC's penny stock. And right before that, they were going to pull out like all their options and all that stuff in JC Penney's, and they lost a great deal of money in their 401k. I believe they also just recently pulled out the money. I think it dropped even more recently. And they were able to at least save that money to purchase their house. So, you know, luckily for them, they did pull out at the right time, or the second to right time before it dropped even more. But it's just a learning opportunity. And luckily they are able to purchase their house here in Texas. And we actually purchased the house like 2 doors down and across the way. So we'll be spending a lot of time with them. Yeah. So where in California did you live, since we're both?
I lived in a couple places. I lived in Laguna Beach, well, Aliso Viejo, which is on the top of the hill and I also lived in Huntington Beach. But I grew up in Cerritos, which is next to Long Beach.
Yep, I am all familiar with all those areas. I actually lived in Laguna Beach before we moved here. The girl I was dating before my wife was in Aliso Viejo, and then we moved to Irvine. So I'm all familiar with all those areas. Cerritos too. I think there's a airport right around there, right?
Yeah, well, there's the Long Beach Airport, and then there's probably have Santa Monica and Long Beach.
Yeah. Great. A great place to live, but it's very expensive, and it's very now it's going to crap. But for a whole different topic, and my mom actually lives in Mesa in Arizona. Sure. So we share a lot of the similar areas. So so Eric, where can more people find out about you? Do you have a website? Do you have just Facebook? Tell us a little bit more where people can find out more about you. And do you have a program in day trading, or do you just do it kind of as fun?
No, you know what? I've thought about that as well, as far as monetizing and making a living off it. But at the end of the day, it's one of those things. It's a passion, and then once you start making money as a career option, which is an option, kind of the passion goes away, and then it's more of an obligation versus passion. So I've decided that since I make a significant amount of money as a secondary option, I'm blessed to have that. It's just the other part is when I give financial information to others, I also feel internally obligated to make sure for their success. Right. So then it also takes away from my own strategies and my own success, because now I'm pouring into others, which is amazing, but that's not my primary objective for day trading. Right. So as you can see on the bottom, people are like, why is this guy talking about finances and it says health coach? So that's, I've dived into that for the last 2 years, and I am a health coach, and I help people lose weight via nutrition. So as opposed to the gym. So that's kind of where my time and efforts have been spent, which allows me the time at home to day trade, allows me the time to do real estate, to do flips, to do other things that I'm passionate about. And so, mainly it's, Facebook and Instagram, I have a pretty decent following. But as far as websites, I haven't really dove into that. That's another niche in itself, but that's coming.
Yeah, no, definitely. It was funny because I feel like you're like an older clone of me, because I was a personal trainer before this. That's how I got into to real estate, is because and health and wealth, I think, go hand in hand, because if you don't understand your body, your mindset, it's going to cost you in the long run to make a substantial amount of money, because you're going to be investing in your health, and you're going to have to invest in your health instead of just working on it now. It helps. I mean, for me, it helps with my confidence, helps with getting more energy. I just started getting the nootropics. I don't even know if I'm spelling that correctly or saying that correctly, but I'm just starting that, and that's all about becoming limitless in a sense. I don't know if you guys ever seen that movie Limitless, where they take a little pill and they can like open up their cognitive abilities like 1,000%. I just bought these. I haven't even jumped. Oh, you can't see them. I just
there you go.
To those, but okay. But let's actually take a step back. What do you do in health? I know you said nutrition, but you help people lose weight. Are you a certified nutritionist, or do you just understand the benefits of eating right, eating correctly, and providing your body with optimal fuel so that you can actually perform at your peak every single day?
Yeah, it's the latter. So I don't have an education per se. I don't have an exercise science degree or anything of that nature. So it's more of a passion that turned into a reality, and then turned into, I'm part of a network marketing company as a lot of others are as well. And then just kind of taking that to, not only did it work for myself, which is similar to most people's stories, it works for yourself first.
Right.
I had skin cancer and gained a lot of, not a lot, but a decent amount of weight, and I was pre-diabetic, as thin as I am, due to the way I ate and so on and so forth. So I had to make some changes. So I made some changes in my personal life, and that transformed into just me helping others and turned passion into business. And so now it's just I pay it forward. So it's been a blessing, and I've had some great clients and some great wins. And that is a business where it's 100% about them, not about me. So, and I like that, because internally, I think the best satisfaction you can get in any business is helping others. So that's where it's time is best spent doing that.
And if someone, I mean, what is your perfect audience, so that if someone is looking for health advice,
Sure.
what would be someone who would want to work with you? Someone who just wants to lose weight, someone who is diabetic, someone who wants to be a bodybuilder? What kind of person does that look like?
It's mostly, I have a few people that want to gain weight. I don't really specialize in that, but I'll take it on if they ask, for personal relationship wise, but I'm not marketing towards that. More so, I would say between 40 and 55 is my avatar range. Reason being is, people's metabolism, both female and males, metabolism slows down. So that's the biggest thing for weight loss, is a lot of times our joints, our bones, everything's not working correctly. It takes longer to heal. Obviously, COVID comes into play. So people aren't out exercising or being as energetic as they would like to be. So it's a lot easier to gain weight, especially during this time. So really focusing on helping, fathers, mothers of that nature that have kids, that are busy, that don't have time to eat right, to prep, or to exercise. So I cover, the gamut on those things. So we start with nutrition, and then nutrition leads into exercise.
And is this and that's, a lot of people do that wrong, is they try and out exercise their nutritional plan, which is that's not a great strategy at all.
No.
I'll leave that to the experts. I don't do that anymore, and I don't want to take any clients on. But what would you like? Do you guys, with your company that you are promoting, do you have like a nutritional plan? Do you have shakes? Can I order like meals to go? What is it that you guys offer?
Yeah, absolutely. It's a variation of both. So shakes, bars, also a pre-meal. So it's the idea of eating 6 times a day, and smaller meals. So it's portion control. And so a lot of people, calorie deficit, calorie in, calorie out. So a lot of times, I equate it to like a car, right? If you have a high performance car, there's usually 3 grades of fuel you can put in your car. There's 87, there's 87, 89, 91. And if you're in California, you have a higher ethanol, which is 93. So most high-end cars at a minimum need 91, correct? So equate that to your body. Your body is the high-engine car. So if I'm feeding my body crap, i.e. the 87, my body, i.e. the car, is not going to run as proficient as well as if I fed it the 91. So look at food as fuelings, and you're fueling your body. So what you put in is what you get out. So if I want brain, thought patterns, if I want energy, if I want higher metabolism, I need to eat right. So it's not rocket science, I tell people, but you have to have the discipline and the structure in order to make it happen.
I love that you just said that, because I use that analogy all the time. I've never actually heard anyone use that analogy. So you are the older twin of me. I've already decided, because I used to say, like, our bodies are like a Ferrari, right? Like, you can't, and most of my clients when I was training would drive like BMWs, Lexuses. They had to have wealth because, they were working with me. And so I would always ask them, like, hey, like, you drive a BMW, you drive a Porsche. Like, what are you putting into your car? Oh yeah, 93, 91. Like, would you put that into would you put 87 into your vehicle? Because if you do that, it's just going to be sluggish. And they're like, no way, that would ruin my engine. And I was like, well, that's exactly what you're doing with your body when you're putting in fast food or soda or alcohol. All these things are just wearing down your gears. I don't know cars, but whatever the engine does with its those things that go up and down, like where the gas makes it explode. What was that?
Pistons.
Yeah, the pistons. Like, you're going to wear down your pistons, and ultimately you're just going to ruin your car. And so you would never do that. So why did you do that to your body? And yeah, I totally agree. And I'm so glad you actually said that analogy, because I also say it's like rocket fuel for your body. Like, you wouldn't put, if you have a rocket, you're not going to put regular gas in it. You're going to put rocket fuel. So Eric, I love that you said that. I love all the knowledge bombs that you dropped today. That was amazing. It makes me want to day trade so much, just by learning from you and just hearing what you had to say today. I think it's really cool that you. Oh, actually, I'm gonna one last question before we leave. Is there like a minimum amount of stocks that you should be able to purchase when you get into day trading? Like, it seems like day trading you can't just be like buying, like you said in the very beginning, one stock or two stock. What is kind of like the baseline you should kind of have willing to invest before you get into day trading?
Sure. So a lot of the platforms similar to like TradeStation, Schwab has their own, Fidelity, everybody has their own platform, but Robinhood is probably the best platform for beginners because it doesn't have like the $5.95, or it's free trading basically. So they make their money off advertising. TradeStation, the minimal investment into TradeStation is $5,000. So that's usually the number that you want to start with. So that's a goal to shoot for. However, you can still learn to trade on other platforms. The other thing which is really nice about TradeStation, so for those that are beginning, is they actually have a simulator. So you can actually trade within TradeStation and use their money live. It's not actually investing the money live, but it acts as if. So you can gain the knowledge. You can do options in that. You can do day trading. You can also do Forex. And it gives you the opportunity to play around with it as if you were investing live and you're using their kind of fake money. But that's a great way to learn the industry and to kind of self-teach yourself how to do it.
That's amazing. Eric, thank you so much. One more time, where can people find you on Facebook? Say your whole name, and then just go ahead and say, I know you don't have a website, so if there's any other places that people can get in contact with you about if they have health problems, if they want to learn, anything, where can people find you?
Yeah, absolutely. So it's just pretty much I am Eric DeB is my Facebook, just facebook.com. I am Eric DeB.
And how do you spell DeB? I know you spell a little bit different.
Yeah, it's D as in David, E as in Edward, capital B as in Bravo, I-E.
Perfect.
Yeah.
And I am Eric DeB is how you find him on Facebook. I'm guessing you can Google that too and find you pretty easily on Facebook if you can't spell his name correctly, because that would definitely ruin it. Thank you so much, Eric. It's been a pleasure. This was amazing. I learned so much, and I hope our viewers also. So anything else you want to add before we get out of here?
Yeah, I would. The biggest thing is I tell people start early. Start early. You're never too young to start investing, literally. So the earlier you can start, the better your future will be 15, 20, 25 years from now. So, and even if you think you don't have the money, you have the money. So even if it's $5, $10, $20, whatever it is, put it aside, put it in some kind of investment that's going to make you more than 10% a year, and just let it ride.
Perfect. Eric, you are amazing. Thank you so much for coming on today, and I'll talk to you soon, buddy.
All right, take care. Bye-bye.